Hello everyone, this is Ahura. Will be with you to review the US inflation data and market reaction. As you know, today we have actually just like a few minutes ago, we had the US personal income and spending data and also personal spending prices. Uh, the core PC price index is the most important inflation number, which is the Fed preferred inflation measure as well. When Federal Reserve is talking about the inflation, they mean exactly these numbers core PC price index in the annual scale, and it's 2.9%, 0.1% higher than previous months. In June, it increased from previous 2.7% to 2.8%. Now again, we see this number increasing to 2.9%. And on the monthly scale, we can see the number at 0.3%, the core PC price index, which is in line with market expectations and repeating the same number as previous ones. On the headline scale, headline front, PC price index increased by 0.2% monthly, in line with market expectations. And headline also repeated its 2.6% of June number. This data says that the inflation is sticky. We didn't have a surprise. Inflation didn't surprise the expectations, but the expectation it was higher than the previous month. So, which means that the inflation is increasing. Even thought it's in line with expectations, but it means it's increasing. But at the same time, we have to look in the personal income and spending numbers. You know that the income increasing, as you can see here, by 0.4%. Higher than previous 0.3%. And spending also increased to 0.5% from previous 0.4%. And also the previous 0.4% revised higher from initial 0.3% expectations. All these numbers say that the market is expecting higher prices as they are spending more, because while you're spending more money, it means that there is a demand. The real personal consumption also increased by 0.3%. While we can see here, we can see these numbers here, we can say that look at the other data as well, like the initial jobless claims. The initial jobless claims increased by only 229,000, much less than 235,000 of the previous week. And again, as long as the initial jobless claims is less than 250,000, it means that the labor market is strong and good. At the same time, we know the unemployment rate is around 4.2%, and leaving the jobs is low. Firing also is low. So the labor market is strong. Demand is strong as there is more income. All this data says that the Federal Reserve will face much more challenges to control the inflation. At the same time, we know the producer price index increased in past 2 months, and yesterday, Mr. Trump they canceled the tax-free for the packages sending to the United States, which is their value is less than $800. So when you see this, all these numbers say that, and at the same time, the trade war is still continuing. Even thought we are in a pause with China, but still that's continuing, which means that still there's a concern. So the inflation is sticky, and still the concerns are resistance. So all these data say that we should be we should have more hawkish expectations from the Federal Reserve. Still, these numbers cannot change our expectation of 87% expectation for rate cut for September. The rate cut September expectation is still 87%. And even I think the personal is more than 90%. There's a chance for rate cut here. But it doesn't mean that in October or in December also we're going to see the same numbers. Still, after these numbers, we can see that there's more than 6% chance of rate hike in October after September rate cuts. And the rates cut, another cut by 25 basis points, it has a less than 45% chance. And on holding the current rate is around 49% or 50% chance. So all this data says that there is we can have more hawkish or less dovish expectation. We can have less dovish expectations from the Federal Reserve. And as the market reactions to these numbers and these data, we can see that the US dollar index holding the 98 area, the area which we were expecting to see the dollar index around that for this week. And with these numbers, we can see that there is a less chance now for US dollar index to slow down from these levels. So it can probably hold the 98 area. So while the dollar index holding the 98 area is still strong, the gold is increasing. So which means that the market, well, when we see that the dollar is still strong and the gold increasing, it means that the market there's a concerns about the market, and even thought this concern if it's correct or not correct, but there is a concern and there is a demand for the safe haven. And that safe haven demand holding the gold price up. And for now, there is no reason besides that the gold price is going to be going to be slowed down. And this data increasing the concerns and increasing the pressure on the putting some pressure on the stock market. These that are not a positive for the stock market, as there is a chance for the rate hike. I mean, not the rate hike. There is a less chance for the more rates cut in the next months. So the profit taking of the new after printing the new record high in S&P 500 and the dollar stocks main indices, the profit taking after new records, putting the stock markets slightly under pressure, and even thought there is a overall uptrend still didn't end it. We don't have any sign that the overall uptrend's ending here, but at least we can say that for short term we can say we can expect some pressure on the stock markets, and this profit taking, this less dovish expected policies, all of these data can increase the pressure at least for the short term on the S&P 500 and the dollar and the stock markets. It's less chance we see that the S&P 500 to close lower than open price, as the open price was around the open price of market was now there's a chance even $6,470. There is a chance we see that we can say there's a chance that we can say that the markets can close lower than open price this week. So even thought if they had a new record high, but on the weekly scale it can close lower. However, on the monthly scale, as if you go to the monthly scale, today is the last trading day of the month, right? Yeah, today is the last trading day of the month, so that means that let's go in an H4 or daily chart. On the monthly scale, it can close higher. The price will close higher, but oops. On the monthly scale, it can close higher as the month started around this area, 6,300. On the monthly scale, it will close higher, but on the weekly scale, we can say that downtrend is continuing. We are going to start in September, and September generally is not a good month for the for stock markets. We are usually more than 80% of them, more than 60 or 65% of September. Usually the market closed lower. So that means that this, at least in the short term, the pressure on the stock markets can start and continue, while the gold and dollar index can take advantage of this, and slightly more pressure on the oil as the holiday demand also going to end. I mean, there's the last demands of the holiday season. So all of that are not positive for the stock markets, not positive for the energy and especially oil, but they're positive for the gold and dollar index. At the same time, it cannot be positive for the cryptocurrency market. I mean, it cannot change this, that it cannot support any other cryptocurrency market. I mean, maybe we can find another reason to support the cryptocurrency market, but these inflation numbers are not in favor of the cryptocurrency. So the overall downtrend in cryptocurrency can continue. For now, the correction at least can continue. I mentioned earlier that the 106,000 is the pivot if you want to say that the cryptocurrency or the Bitcoin can fall lower. Yeah, that's the markets and inflation numbers and the market reactions. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.